Good morning, investors. It is Wednesday, November 19th, 2025, and if you're looking at your portfolio today, you might want to grab a second cup of coffee. We are seeing a sea of red across global markets as Wall Street holds its breath for the biggest earnings report of the year, and the hangover from the government shutdown continues to cloud the economic picture. Your name. And in this video, we are breaking down the massive sell-off in the S&P 500 and Nasdaq, the delayed jobs data that has the Fed flying blind, and the specific comments from President Trump that moved markets in the last 24 hours. Plus, Bitcoin just took a dive below $90,000. Is this the buy the dip moment or the start of a crypto winter? Let's dive into the numbers. Let's start with the scoreboard from yesterday, November 18th, because it was ugly. The S&P 500 closed down 0.83%, finishing at 6,617. That is its fourth straight day of losses. We are now seeing traders actively de-risking, taking money off the table before Nvidia reports earnings later today. The tech-heavy Nasdaq took a harder hit, tumbling 0.8% to close at 22,708. And the Dow Jones? It shed over 550 points, dropping 1.2% to finish at 46,590. Why the sell-off? It's not just one thing. It's a combination of valuation fears in AI stocks and a wait-and-see approach to the US economy. The pain wasn't limited to the US. Over in Europe, the FTSE 100 in London dropped 1% to sit at 9,578. The German DAX fell 1.1%, and France's CAC 40 was the worst performer of the bunch, sliding 1.6%. In Asia this morning, things were a bit calmer but still cautious. Japan's Nikkei 225 finished basically flat, hovering around 48,724, while Hong Kong's Hang Seng dipped 0.5%. Now, let's talk about the macro picture, because this is where things get really interesting in this post-shutdown economy. We are currently in what analysts are calling a data vacuum. Remember that record-breaking government shutdown we just came out of? Well, it's still haunting us. The September jobs report, critical data that the Fed needs, has been delayed. We literally do not have the official payroll numbers yet. This is forcing the Federal Reserve to make decisions based on incomplete data, but that hasn't stopped them from talking. Yesterday, Fed Chair Jerome Powell, speaking at a conference in London, tried to calm nerves. He explicitly said he is, quote, not worried about inflation accelerating. That is a dovish signal, suggesting he still sees the path to lower rates. However, we have a split house. Fed Governor Christopher Waller came out yesterday and said he supports a rate cut in December. Meanwhile, Michelle Bowman is focusing heavily on banking supervision, defending new, stricter oversight rules that have the banking sector on edge. So, you have a market that is blind on jobs data, listening to a divided Fed, all while waiting for the Nvidia bellwether. That is a recipe for volatility. Briefly on the international macro front, we did get some fresh data out of the UK this morning. Inflation there has cooled to 3.6% for October, down from 3.8%. That's good news for the Bank of England. But as we saw with the FTSE drop, it wasn't enough to save the market sentiment yesterday. Also, watch out for big tech in Europe. The European Commission just announced formal investigations into Amazon and Microsoft regarding their cloud computing services. They are looking into anti-competitive practices. This news alone helped drag those stocks down yesterday, contributing to the Nasdaq's fall. Now, let's move to the political pulse, because politics is driving price action right now. President Trump was very active in the last 24 hours. In a speech to franchise owners yesterday, he directly addressed the inflation fears that have been bubbling up due to his proposed 2026 tariffs. He told the crowd, "We have it almost at the sweet spot," referring to current inflation levels. He is trying to reassure business leaders that his trade policies won't reignite the inflation crisis of the early 2020s. But here is the part that made traders nervous. He also admitted to shouting at foreign officials during a recent trade negotiation, saying it's the reason he lost his voice. Markets hate uncertainty, and a shouting match over trade deals signals that the tariff war narrative is very much alive. On a more constructive note, the U.S. Treasury did sign a new framework with Saudi Arabia yesterday to deepen capital market ties, which could bring fresh liquidity into US equities in the long run. Finally, let's look at crypto. If you thought the stock market was volatile, check your crypto wallets. Bitcoin had a wild 24 hours. It plunged below the psychological $90,000 barrier, hitting lows around $89,300 yesterday as risk assets sold off. However, we have seen a bounce this morning, with BTC clawing its way back up to the $91,300 to $92,000 range. Ethereum, however, is looking weaker. It is down about 2% to 3% in the last 24 hours, trading heavily as it struggles to find support. The correlation between big tech weakness and crypto is undeniably high right now. When the Nasdaq sneezes, crypto catches a cold. So what is the takeaway? The market is in a holding pattern, waiting for two things: clarity on the delayed labor data, and, most importantly, Nvidia's earnings report, which drops after the bell today. If Nvidia misses, or even if they just beat expectations but give weak guidance, this sell-off could accelerate. If they crush it, we might see this sea of red turn green very quickly. I will be posting a full breakdown of the Nvidia numbers and the market reaction first thing tomorrow morning, so you do not want to miss that. Next step for you. If you want to stay ahead of this volatility, make sure to subscribe and hit that notification bell right now. I'll see you tomorrow for the Nvidia breakdown. Stay sharp out there.